Okay, so it's been a little while since my last video. Just thought I'd try and do one now. I've got Adobe. Let me just squash this down a bit. Trying to do an earnings play on a 110, 115. I'm just juggling what is going to be my maximum price by the end of the day. Got an order on for currently 70 cents, 72 cents. Current bid ask is 66 to 75 and 70 mid price. Bit of a rally, should see it pop somewhere close, but we are fighting the time. There is, okay, so there's my virtual. Picked up 444. Okay, so that was a 70. Well, that's no good. I forgot to adjust that. I actually want 72. Okay, so just watching. If it falls away, I'm going to obviously lose out and probably won't get the fill, so it's a tough call. Says 46 cents. Okay, some stats on this trade are implied volatility 98%. Average implied volatility around 30%, so there is a huge crush coming tomorrow. Like I say, it's an earnings play. I think I'm going to have to drop it down to 70. What's our bid? Jeez. And there's the instant fill. Okay. Well, now I've just got to hope that we don't rally too much. So 70, so it's showing the mid price at 66, and I just got sold it for 70 cents. There you can probably see that's probably box. Let me have a look to see who I got filled with. Was it box? It was CBOE, so that one. Nice. Okay, so sorry, let me just get a bit organized here. Just do my Control V, my screenshot. So there's 2016 at 12. The date is the 15th, and it is Adobe. And I'll just check the bid and the ask. Bid and the ask was 62.72, 62 and 72. Bid 0.62 and 72, and I sold it for 70. Excellent. Let's cancel this extra order off. Very lovely. Okay, so a bit of a rundown on this position. Let me just, we'll keep this up here so you can see the option prices. Let's go to a daily. It's an earnings play. It's a one-day trade. It expires tomorrow, so it is going to be all on. It is either going to be go for profit or bust. It's now what I've done is sold a future round tools. Pretty safe. Famous last words. 110. Edit that. I sold a 110. And a 115 and bought a 115 protection. So although there's a $5 move, at 550, 570, it could possibly pop in the money, but with the IB crush, it should devalue any advancements on that. It's a one-day trade. I don't care where it goes, as long as it's not up above this point here tomorrow at expiration. As long as we are below 110, that will be maximum profit. I took 70 cents per contract. I have a few contracts in it. So yeah, so basically it's $70 per contract. I have received that $70 per contract already in my account. Spread is currently 68 in the mid. Typically towards the closing bell, volatility rolls off on positions, and yeah, obviously that should help as long as we don't go up too high. I mean, I got filled at about 105.22, so as long as we stay below there, should be lovely. I'm sort of expecting it won't move too much. I mean, you don't know and I don't know, but I'd imagine which could be looking towards the dollar range, somewhere between $100 and 110. I probably could have sold some 98s. Let me just check. No, the hundreds are probably about the only one worth selling. Sell. Let's just price them. I could sell the 195 for 65 cents. So basically from here below, which might not be too bad. That would add some extra credit for no extra additional margin or no additional cost. Another 65 cents would be kind of quite nice per contract, of course. Tempting, very tempting. So yeah, basically it has an implied volatility of 99%. The average implied volatility is 30%. So you can see 90%, the average implied volatility is 30%, so it's going to have a huge crush tomorrow on opening, regardless of what the stock does. I would expect probably, yeah, I'm looking for it not to move too much, but hey, you just do not know. As you can see, last earnings it ran about $8, so it has the potential. So basically just going to have to run the gauntlet and see how we go and manage the trade at the end of it. So this is Adobe, a one-day trade. I'm looking for a, let's work out the return on capital. It is a 14% return on capital if I take this to max profit, as long as we stay below 110 by tomorrow's expiration. I'll just pause this. Be back. Okay, so I was also looking at doing an Oracle position, but a little low on capital at the moment, so had to choose between Oracle and Adobe, and Adobe with a higher implied volatility got the nod. As you can see, the mid price now is 64.5, 65 cents. So my broker shows the pricing as the full-blown ask, so it is showing me as 2 cents profit. Actually, now that should disappear by rights. It's showing 69 cents. So anyway, so this is Adobe. Like I say, it's been a little while since I've done one of these videos, but we'll see how this one pans out. I will try my best to record the opening bell tomorrow and maybe even the closing bell. What day is it? It is Friday my time. Okay, so yeah, I might try and combine a video of the opening bell showing the implied volatility crush, the price blowout, profit, loss, whatever it's going to be, and then maybe a bit of a recap at the end of the day, depending whether I have to close it for a loser or whether I can run it all the way to expiration for maximum profit. Now what do we got? We must be getting down. It is 3:54 p.m. Stock's at 105.23, so it was at 20 when I sold it, 20 cents, so 105.25. So I'm down about 20 cents on the stock. This is once again why trading options is so much more superior than any other utility out there. Being able to trade non-directional, and this is just a simple position. You know, like I was saying, I could also enter a 195, and then basically if it stays anywhere between 100 and 110, I would make $70.35 per contract, which would be something like a, let me just work that out, what would it be, $7.35, it would be a 27% return on capital regardless of the direction. So basically if anywhere between 100 and 110, a 30 odd percent, well 27 to 28% return on capital. Show me a share trade where you can pull 30% or 27% return on capital in a day, and how often can you pick those trades, how often can you get those trades, how often are they available, and how often do you get them right. Now we can have a look if I remember tomorrow. I'm not doing the puts, but hypothetically if we did the puts as well, what would actually happen? The price for the puts is, I'll show you. Okay, so let me just Okay, so here's a put trade, a 195 put. You can see the mark price is 65 cents. So bid and ask 62.67, mid price 65. So basically I'll lock that in for 65 cents. And 65, there's my 110. Okay, so there you can see the, let's just close, I won't bother. So 66. So easy, sell it for 65 cents. Okay, so 2 minutes remaining. So we'll check. I've locked that price in. So we'll see what happens tomorrow if one of them does actually blow out to the downside or the upside. Okay, so 2 minutes remaining. Stock price is under the dollar now, under the 105. It's down 30 cents on my entry. It is showing ask the volatility must be increasing. It typically rolls off in the last 5 minutes. It's a bit interesting that they're increasing it. What was it? 62 and 72. Increasing the volatility on the ask, not so much on the bid. One minute remaining. Boom, 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 boom. Been a tough couple of weeks. More tough on IWM. I've been dealing with the short squeeze on IWM with the rally that it's done. Lost a reasonable amount of money on that. It's been a bit of an ugly trade. Been battling with it, fighting it, doing my best to keep it or get it back into profit, but yes, it's been a bit of a horrible time. I haven't really had any losers since about May, so I was well due for one. But anyway, making a bit of a, oh, I was just about to say making a bit of a rally into the 105s, but price is fluctuating quite a bit. There is the closing bell. Bum, bum, bum. Bit of a wider spread. It was 62.72 when I entered. So you can see what I mean by only 1 cent up on the bid, but it's 3 cents up on the ask. Stock price down about 20 cents from my entry. And here comes the fun and games. Let's drop into a 5-minute chart. So there's my entry. Almost pretty much got filled. Oh, I was going to say on the highs until this candle. I didn't even know it had earnings. I wasn't really looking for any other trades, hence why I waited till now to get filled. I basically just got up and saw the implied volatility in this and thought I would throw some money at it, see how we go. So anyway, this is Adobe. Mid price 69, so it's pretty much same price. Wow, 200,000 shares at 105.10. Wow, that's a big push. We'll see how this goes tomorrow. Come back tomorrow. Thanks for watching.